The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 11th, the terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find a gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I am absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Now, if you can't dial in, but you've got a question, we've got you covered. Go ahead and send me an email. Rifle that off to Steve at TFNN.com. Please send it early. And then the subject heading, please put radio show question. Of course, if you're inside our tiger's den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got a sea of green, all the U.S. sectors inside the S&P 500 trading the upside, all the U.S. indices trading the upside. But what's all that mean? Well, that's what we're going to go figure out. Dow's up 260, S&P 33, NASDAQ 100, 143, Russell up 5, semis up 25, trannies up 105, nothing over 1%. The 1% is about the NASDAQ 100. Gold is off $4. Silver is flat. Light sweet crude is trading down $1. Natural gas is up 16 pennies. And a 30-year Treasury printed out at 122.12. Leading the charge dollar-wise, the upside, you got that Mercado Libre up $59, nearly a 5% move. Booking Holdings $40, a little over 1%. Capri Holdings 56%. That is a big move. 19 buckaroonies. CyberArk Software up 17. That's a 12% move. And HubSpot 3% or 16 buckaroonies. To the downside, it is Shockwave Medical down about 5%. Or $11, 10% for Enersys. That's a $11 move. 8% for that's Boyle. Fastar Pharmaceuticals down 10%, $6 move. Tapestry off 5, and Ebix Inc. off $5. That's a 24% move to the downside. So we got some movers, but we definitely have some shakers. Let's begin by taking a look at that TAS market breadth. Let's start with that 30-minute time frame. For the 30-minute time frame for the S&P 500, it is market breadth bearish. 253 instruments below profile, 91 above. Let's take a look at the settings here for the NASDAQ 100. It currently has 14 above, 56 below. So the 30-minute TAS market profiles tell us that more instruments are trading below support than trading above resistance. Let's go take a look at those other. That's interesting, isn't it? Well, that's at least the short term. Let's take a look at the 60-minute, the 240, the daily, and the weekly. Well, it's bad news bears. Why? Because you've got bearish crossovers for the 60, 240, and daily. It's only the weekly that has that positive, bullish crossover. We take a look at the NDX 100. What we're going to see here is a really screwy market. You are bullish for the 60-minute, the 240. And when it comes to the daily, you've got 23 above and 37 below. So certainly it's in the hands of the bears there, but short term, 60 and 240, it is definitely in the hands of buyers out there. So where we're at here is expect a choppy market. We don't have any kind of unanimity. Is that a word out there? It is right now. Now, where do we want to go from here? I think where we go from here, well, let's answer Peter's question. Peter was asking about the advanced decline oscillator. Is that below zero, above zero? If we take a look at its chart out there, it is still below zero. And so if we take a look at that, is panel number 3 out here. So panel number 2 is the actual advanced decline line. which has broken its descending trend line. So that's a short-term positive. I should draw some new lines in there. I'm not going to do that right now. What Peter was really asking about was the advanced client oscillator. That is panel number 3 here. Once it gets below that zero threshold level, that tells us if you get 2 consecutive closes below it, that the sellers are the ones that are in control. That's the case now. Peter, when we combine that with the spot volatility trade above its 50-day, again, the 50 days at 14.98, the spot volatility at 15.31. Those are bearish conditions for the S&P 500. So that's what we have there. I hope that helped answer your question. Now, where do we want to go? Well, now I think we go take a look at the equity future contracts. Let's go take a look at, in essence, our 8-panel day trading-ish type version of this set of charts. We're going to change screens here. See how I caught that? We'll see if I catch them all day long. And now let's start with the NQ. So on the NQ, on its 30-minute, it was bearish, and on its 60-minute, it was bullish. So on the 30-minute, that's bearish out here. So it busted through any level of support. That's the important question for us. And the answer here is no. In fact, let me just make it's a big one. It is a bullish in structure. So on a 30-minute basis, we do have negative market breadth. What price is doing on the ES mini for that time frame, it's pulling back into its bullish structured zone of its 30-minute profile. That zone is between 15,268 and 15,303. And if price can maintain that green oscillator and change line at 15,318, another level of support will have held out there. And if that holds well, that would then suggest to run up to the 15,442 level. Now that's the 30-minute chart. Negative market breadth, so we can't be certain about that. So let's go figure out what's going on in the 60-minute. The 60-minute had that nice 3 drive to a bottom pattern out there at 3A to B equals CDs out there. So it was really kind of perfect. And again, those patterns get confirmed or should get confirmed with bullish or bearish reversal candles. In this case here, it was the bullish reversal candle. Now, we open up the 60-minute chart and see what it's done since then. Whoops, didn't mean to do that. I meant to do this. Let's see if we can get the slide over. There we go. So what do we have out here? We have price. We don't have a top. There's no A to B equals CD pattern, anything that I can draw in here. None that would work, none that would qualify. And so what we do have out here is price pulling back and testing support. Support for it could range anywhere between 15,249 and 15,294. We're trading right now at 15,313. Price also pulled back and tested and rejected that oscillator and change line. Now it's only 11.13, but if price does close above 15,294 out there, well, then it's certainly not bearish. It would really be bullish. No topping signal and price above resistance levels. So that's what you'd be looking at when we come into that 12 noon time frame. It was the 240-minute chart that was also bullish for the NQ out here. We take a look at it. It did close its last bar. That was at 10 a.m. above resistance. Will we get 2 consecutive closes above that? Well, this bar here doesn't close until 2 p.m., so I don't know the answer to that. But if we did get a close above 15,318, the answer to that question would be yes, and that would suggest that we would rally further, at least the NQ would. So that's when we take a look at the 60 and the 240 as well as the 30-minute chart out here. Is there anything else for us to take a look at that's worthwhile to take a look at? I would say the 5-hour time frame chart, we have resistance at 15,403. We have resistance at 15,427. That's the center of that bullish structured profile out there. That's the area to watch. So what is the area to watch? 15,428. 15,428. The NQ closes above that. It'll likely head higher tomorrow. I won't be with you tomorrow morning, so I'll give you this information now. It'll likely head higher, and the price target would be that oscillator and change line, currently printing at 15,644. Steve Rhodes with TFNN. We get right back. We'll take a look at BTAI for Dan and anything that anybody else wants to look at. Give us a call at 877-927-6648 or Steve at TFNN.com.
Tigers, candlestick pattern analysis is a primary tool among successful traders, and you should be no different. Candlestick patterns can demystify buy points, sell points, general price movement, and so much more. At 4 p.m. on Monday, August 14th, trader Teddy Keckstadt will be hosting a live hour-long webinar on Japanese candlestick patterns. Teddy, the author of the Tiger Forex Report, has been trading for 33 years, and candlestick patterns have been instrumental to his success. For just $97, see how to use candlestick patterns to analyze stocks and options in order to capitalize on market swings, increase your odds of success, and decrease your risk. During this live webinar, you will learn when to use and when not to use Japanese candlestick patterns in this volatile market, dispel the myths about this strategy, and see just how much the mastery of candlestick pattern recognition can impact your trading. Visit TFNN.com today. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's get to our first request. Is from Dan inside the Tigers Den. Wants to take a look at the BTAI. BTAI is Bioxyl Therapeutics. We're going to switch over here to the white background charts. Now, it has 2 nice TD9 count daily bottoms. The first one on that real big gap to the downside. That generated bar number 8. The following bar was bar number 9. It completed that pattern on July 3rd out there. That led to a run right up to resistance. That's the top of its daily profile. And then it looked like it was going to be able to break out. It didn't. It got back inside the profile. And what it did on the trading day, this is about 3 days ago, on August the 7th, it formed another TD9 count bottom pattern. Now, Dan, you've got a brand new profile out here. It formed yesterday. Your level of support is 724. Your center of that profile is at 780, and 837 is the top of the profile. If this can get back above 837, and I mean close above 837, you should see a run to that 1124 level. That TD9 count bottom pattern set up a resistance point, and that is at 1124. On a weekly time frame, prices testing support. So you like to see a daily bottom form with some type of bottoming type signal or potential bottoming signal on a weekly time frame. Testing support is one of those patterns. So as long as this remains on a weekly basis above 750, you are in good shape out there. The monthly chart is the wild card. The monthly chart says if that TD9 count bottom fails anytime soon, you're likely to see a move to the 558 level. That's its TD9 count breakout area. So BTAI on a daily time frame, it's got a TD9 count bottom. You're with inside profiles. It should at least continue that consolidation. 837 is going to be your next key level to be watching. Hopefully that fails for you. As I look at a 30-minute time frame chart out here, I don't see anything negative here. I saw a nice Rhodes Momentum Indicator bottom signal, prices above profile, so no reason that BTAI shouldn't continue to move higher out there. So, Dan, I hope that helped you out with regard to BTAI. We'll get to the euro here in a moment. First, let's go take a look at Trader Dan. Trader Dan wanted to take a look at BA. And as we take a look at Boeing out here, we've got this trading out at about 238 and change. And what this did, no, it hasn't done it. So what I have out here is Well, I've got to sell the D point pattern, that's for sure. So it generated a top, it generated a wave 7 top, did both of those on August the 1st. What that led to, it led to, once you get a top out here, what really should unfold, this is one of the reasons why I developed that oscillator and change line, because I wanted to know, and I imagine inquiring mind they want to know as well. When is retracement just a retracement? When is retracement just coming back to support? Remember, when markets are moving in higher and lower, they're usually not going in a straight line. They're going up and down or what have you. What you and I want to be able to understand, and look, it's a competitive advantage. There's no question about it, that using these market profiles, you and I have a competitive advantage. Absolutely. Because we know where buyers and sellers are positioned. We don't know whether they'll be able to hold the course or not, but we know where they're positioned out here. Well, in this case here, when we take a look at Boeing, what price did was it formed that sell the D point. It formed a wave 7 top, and price pulled right back, and it tested and rejected that green oscillator and change line. When you have a valid top and you have a valid test of support, it takes a bearish signal, which it did generate, and turns it to neutral. And that's exactly what's taken place here. Price is trading with inside that profile. Even if you generated another bearish shooting star candle today, that's the current candle out there. It's not going to change things. It's just all that would do is it generate a Rhodes momentum indicator top. Are two tops better than one? Not that I've been able to identify. But again, it's still a consolidation with inside the profile, or really between the oscillator and change line and the top of the profile. So you've got a consolidation going on, and it is a bearish structured profile. Remember I said that, Dan, that we had, this is Dave, I'm sorry, this is Dave out here, that we had a competitive advantage. See, on your screen, if you don't have these profiles, you don't know. Why is price struggling at 239.87? Now you know the answer to that. The reason is, when you take a look at the center of that profile, where you have an equal amount of buyers and sellers at 236, you are in a sell zone. So 236 to 239.87. Now, what price must do in order for Boeing to get on its merry way, it has to close above that high. That sell the D point high from August 1st. That high is 243.10. It's got other resistance. On a monthly basis, price is smack dab into its TD9 count breakdown area. If you're a long Boeing, you certainly want to see price close above that on a monthly basis. On a weekly time frame, there is nothing bearish about Boeing. Doesn't look like there's going to be anything bearish this week. It would need a bearish reversal candle. That's not what you've got going on here. So it's really for you about the monthly and about the daily. And let's make it the harder one to get above. That's going to be on the daily. That's that high, 243.10. You get above that, Boeing will continue to fly away to the north. All righty. Let's go take a look at Steve Rhodes. Well, now, okay, well, you're welcome for that analysis. But what I really want you to get is not so much my analysis. I want you to be taking a look at what it is that I'm doing out here and sharing with you those patterns, watching what price does, being able to, so that what we're doing here is we're just increasing our probability of what the market is communicating to you and I. You and I cannot control the next moment. We can only control the moment that we're in right now. We can kind of control the next moment, but we don't have any control. No, we can't really control the next moment other than what we do. And so in this case here, I just simply want you to be able to understand how it is that I'm reading the message of the markets, how it is I believe that you too should read the message of the markets. Let's go to the next request out here. This one coming from Dan, and that's to take a look at the euro. It's going to take a moment here for these charts to populate. But what we're going to do is we're going to the multi-time frame set of charts out there. Is that a gravestone doji? Phil, I got to be more specific than that to me because I'm not sure what you were looking at. But it could, again, I don't know. But I guess it was on that last chart. We'll see if we can pull that up and try to answer that. But right now, we're taking a look at the euro. What do we know about the euro? The euro on a longer-term basis, on the monthly basis, is trying to get back inside a trend line. It's still popular. You can see that here. So it's really struggling at that area out there. What's that mean? It just means it's struggling to get back into its trend, that trend to the upside. When you look at a weekly time frame chart out here, let's simply expand this out. I don't have any kind of a top. What we do have is momentum is kind of waned. It's waned because price is trading below that green oscillator and change line. So it just says, okay, it's acceptable to see another pullback because price is below that key level of support. Now we move over to the daily time frame. And on a daily time frame out here, what do we have? Well, we have a TD9 count bottom that failed. We have a TD9 count bottom that failed. I don't have a bottom pattern here inside of the euro. all that I have, and disrespect these disrespect. Do not pay attention to these profiles that are out here. I need to turn those off. They are not correct. And so if price is able to get above 1.102, close above it, I should say, then we're likely going to see a further rally. And that further rally would take us up to 112. Obviously, if we get a rally inside the euro, we're likely to see the U.S. dollar index move lower. But right now, the key level to be watching here, I'd say would be 1.1029, right around there. That's that daily oscillator and change line. Now, we've got the multiple time frames up here, not just the monthly, weekly, and the daily. We've got the 30, 60, 2-hour, 1 hour, and the 5-hour charts out here. The 5-hour chart shows that this is going to form a TD 9-count top. Well, I take that back. It's going to form bar number 8. I don't know if it's going to form bar number 9 or not out there. It looks like it will. Remember, on a 5-hour chart, I believe that this current bar closes at 2 p.m. Let me just make sure. I don't want to give you any bad date out here. 1 p.m. So what you'd want to watch for there is you want to watch this evening. So, Dan, on a 5-hour time frame chart, and I know you follow the TD 9 counts, I would pay attention to that. That's right now the only topping signal that I see inside of the euro. Hope that helps you out. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. Dow's up 260, S&P 31, NASDAQ 100, 122. Russell's up 5, and the semi's up 17 points. We're taking a look at the chart here for Nike. I apologize, I don't recall who requested it. Doesn't matter. Right now, it's trading above the center of its bullish structure daily profile. That's at 110.09. It's signaling to you and I its intent to get up to the top of that profile at 114.27. As I look at a weekly time frame chart, you've got a consolidation with inside its profile as well. What we can see is that prices struggled to get above that oscillator and change line. So it's attempting to do that this week. It attempted it last week as well. A close above 109.99 at this moment in time. That number will change as price moves up and down. So use that as kind of a guideline. But a close above that would then suggest that price wants to make a move to that 115.79 level. And with inside the monthly chart, Nike is consolidating with inside that profile as well. Is there anything else to worry about in Nike? Well, just simply on a short-term time frame, looks like a TD9 count top has formed out here, and price is pulling back to test support. The question is, will 110.39 or thereabouts hold? That's the first level of support. Next level of support be 109.87, and below that, well, you'd be down to the anywhere between 108.68 and 109.28. But right now, Nike pulling back to test support at 109.87 should hold out there. 110.39 might hold as well. That's what's going on. We take a look at Nike. So again, daily, weekly, and monthly, all consolidations with inside those profiles. And depending on the weekly close, that'll help you understand what Nike's intent is come next week. The next request was to take a look at the GDX out here. With regard to the GDX, we've got a TD9 count bottom that formed or completed yesterday. The key here for the GDX is can it get above that red oscillator and change line? It attempted that move this morning. I didn't get all the way up to it, but got close enough to say so far we've got a rejection. That number, that oscillator and change line, currently printed at 29.66. What's the high of the day so far? 29.61. So that is close enough for us. So you do have this. I think this might have been Charlie that was calling in from Framingham. It doesn't matter who was calling in, but you do have, but I know you were looking for a bottom signal, and you got that. You definitely got that yesterday. Price was also pulling back and testing a swing point that generated a Rhodes momentum indicator bottom back on June 29th. That swing point had volume of 17 million shares. That was tested with 15 million shares when it formed that TD9 count bottom. So you've got a test and reject of a swing point on lighter volume. Now you got to get out of that swing point. You need to close above that swing point. A close above that swing point would be up at 29.62. But 29.67, it'll be a little bit higher than that as the market rallies. You really need to see a close above that red oscillator and change line. As the daily was making a bottom, the weekly was at a bottom area, the bottom of its profile. It's bullish structured profile. Again, when we see a daily bottom, we like to see a weekly time frame that shows that price is at least at an area of support. You've got that in the GDX. Does it guarantee you that the trade's going to work? Absolutely, positively not. The last piece of this puzzle may just simply be the gold contract here. So if I put up the gold contract for you, give me a moment, 112.23. This will populate. What we'll see out here is today is going to be on a daily basis is going to form bar number 8 of a TD9 count. Remember, the GDX, for the most part, gets its P's and Q's from both gold and silver, and I'd say more gold than silver. Today is going to form bar number 8 of a TD9 count, or it will at least form bar number 8 as long as gold closes below 1976.10. And then finally tomorrow, I will not be here tomorrow, but if gold closes below the level I just gave you, and then tomorrow it closes below 1970, you will then have a TD9 count bottom for Goldilocks. So you'd have it for gold. I assume that the TD9 count bottom will hold up in the GDX and NUGT. So if you're conservative, you can wait for tomorrow. If you get that a signal at day's end, then go ahead and fire away. So I hope that helps you out with regard to the GDX as well as Goldilocks. Mimi wrote in, and Mimi wants to take a look at the XLE. So let's go get over to those charts and read Mimi's question. Mimi writes in and says, please take a look at the XLE's profile and their seasonal pattern. Many thanks, and hope you have a great day. I hope you have a great day as well. So we've got a nice breakout going on inside of the XLE. It negated its TD9 count top yesterday. It gapped to the upside. That's a sign of strength. It's trading above profiles, which is down at 86.96, so that was resistance. that becomes support. You also have support at 87.72 right now. The issue for the XLE, Mimi, is going to be the top of its weekly profile. The top of its weekly profile so far has held. It's been tested. That's 89.14. You're looking for a close above that tomorrow. If you don't get a close above that tomorrow, what's it mean? It means on a weekly basis you're still in a consolidation pattern. That's all that it means. If we do get a close above it, then that signals to you and I we should see a move up to 94.71. 94.71 is the top of its monthly profile. Now, you asked for the seasonal pattern. In order for me to do that, I need to do that on a different screen. So I'm going to move over there, and I'm going to hope that I remember to change that screen back here. This is so that my screens just don't shut up. I don't know why this application is doing what it does, but let's go take a look at the XLE. Let this populate. There we go, XLE. And you want the seasonal pattern. So first of all, the maximum number of the maximum amount of data that I have is 24 years, and that's what we have in the system right now. If we just look at this very bottom panel, seasonally over the last 25 years, the months of June, July, August, and September are basically horrible for the XLE. But that is not what we're seeing right now. So, Mimi, I'd be aware of the seasonal pattern, but I wouldn't be paying attention to it. What we do know about the XLE is it's going to continue to move higher as long as light sweet crude moves higher. So, Stevie, let's put up the September contract for light sweet crude. Let's be thorough for Mimi out here. We don't want to leave her hanging. And when we take a look at light sweet crude, what we know about it is it negated a Rhodes momentum indicator top yesterday. It's trading above profile. It's trading above its green oscillator and change line. It is bullish. The weekly chart shows prices trade above the top of its profile. Closed above it last week. Looks like it'll close above it this week. That is bullish. Folks, I hate to tell you this, but it looks like the price of gasoline, of course, we're only looking at light sweet crude here, is likely to continue to rise. More of those $100+ tanks. The only bastion of hope is, can those sellers that reside between 85.59 and 89.23, can they fend off gold's rise out there? Now, I don't know the answer to that question, Mimi, but that's where light sweet crude is headed. If it takes out 89.23, the energy sector, the XLE, is likely headed to the moon. The next request coming in from Lee. Oh, hold on a minute here. Before we do that, we may have a caller. Let me see. And if we do, we've got call ahead seating. You're still seeing the home screen. Dang it, Stevie didn't do that. Thank you, Al. Sorry about that, folks. Hate to do the Pete and repeat out there, but there's your light sweet crude. Daily time negated yesterday. It's Rhodes momentum indicator top. Weekly above profile. Monthly, here's your sell zone. 85.59 to 89.23 out there. Again, if price closes above 89.23, well, we're likely to see a ginormous. No, what we're likely to see is price continuing to move higher out there. So hope that helps you out. Now let's get over to Lee's question. He was asking about FSM. And FSM, geez, sounds like a cigar that I used to trade all those years ago, but probably not. And FSM is actually Fortuna Silver. I didn't smoke Fortuna Silver, that's for sure. Hey, I'm looking at FSM on a big pullback today from a mining action. Can you give me a target for the buy price? Yeah, it is pulling back, and it's below and negating a TD9 count bottom. Really negating two of them out here. So this is not looking good. You want a buy price? Maybe between 231 and 284, but I'd be careful on that 284 number. We get back to this break, we'll finish taking a look at Fortuna Silver. Doesn't look like a good fortune today.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So I switched over to the charts here, the black background charts for Fortuna Silver. This is for LB out here. And if we get a close below 305 this week, I don't know whether we will or we won't, but we have the volume to then form an A to B equals CD to downside on a weekly basis. Price along this left side of that C to D leg lead, that says be careful. Price is likely to make more than a 1-to-1 move. The 1-to-1.272 price target is 243. The 1-to-1 is 275. The bottom of the support level on the monthly time frame is 231. Looks to me like more likely than not, that's where price is headed to, at least as of right now. Maybe we come back to these charts on Monday and see if we did get a close on a weekly basis below that low out there. So I hope that helps you out. I would stay away from Fortuna Silver. I don't see this as being a good opportunity. Let's go to our next request out here. This is coming in from Joe, I believe, and he wants to take a look at an entry point into UNG. So I'm going to go ahead and put those UNG charts up on our screen here right now. We won't stay here for long. And why is that? Well, folks, if we were going to go ahead and make our decisions by the ETF, not the underlying instrument that the ETF is trying to replicate out there, but it can't really replicate it because you got natural gas that trades beyond the hours of the UNG. But beyond that, you would have a island top reversal candle today. That's what you've got. That's the signal. Is that signal worthwhile? Absolutely, positively not. Why? Because the UNG is basically right now, I believe it is a September contract that makes up its holdings. However, you need to go take a look at that too, Joe, out there. It may be both September and October at this stage of the game. Right now, if we just go take a look at those natural gas charts, you're looking for an entry point. The first question that you and I need, I'm going to suggest that you be careful out here. Why be careful? Well, one, the question, well, if we take a look at the weekly chart, we just have a good old-fashioned consolidation with inside its profile out there. If it doesn't close above 285 out here, it's not a buy. It's saying it couldn't bust out through that consolidation. You have to love Tom's expression. If you can't bust them out, you try to bust them down. So I don't know the answer to your question until tomorrow. With regard to an entry point, I would still just be patient. Now, on a daily time frame, did price the last 2 days when it closed above the top of that daily profile, was that giving us a true signal of a breakout? If it is, then 2.757 would be the price would be the level that price should find support. That could be an entry point. If that is an entry point, we ought to see some type of bottoming patterns on the intraday charts out here. Well, the intraday chart that you would be following at this stage of the game would be the 30-minute chart. I'm not suggesting that you take action just yet here, Joe, but you are going to complete at 12 noon a TD 9-count bottom. Now, if that works, if that holds, how will we know if it holds? Well, the first way you'll know is you don't close below the low of the day out here, or the low of the session right now. It's on a 30-minute basis out there. That's the first way. The second way, you start closing above the prior bar's high without closing below the prior bar's low. If you at least get that at a momentum move, and you can do that on a shorter term time frame, a 10, a 15-minute basis, then maybe this TD9 count bottom. So what really should hold here is if, in fact, natural gas is bullish, is really bullish out here, then this 30-minute TD 9-count bottom should hold. And if it doesn't, well, then it just tells you truly be patient. My suggestion, though, is to be patient. If you look at this weekly time frame chart, natural gas has done one thing, and that's frustrate many. But the deal is, this has really been consolidating since April. We're now into August out there. That consolidation could continue. So it's really that weekly chart, Joe, that I would be paying attention to. Rich writes in, he wants to take a look at the Pepsi. So let me close out those natural gas charts and get back up to that. Give me a moment. We'll get back up here to the Pepsi charts. That's not them. Let me see here. Where did I put those? Is this it? No, that's the UNG. It should be the next one. All right, so here we're going to get Pepsi. And let's go ahead and read the question. That might be helpful if I can find it. Okay, you want to take a look at GDX. We already did that. This is from Richard, and Richard says, could you please review Pepsi? He sold his shares around 188, and you're looking for a new entry position. I appreciate you being on the air. Well, I appreciate you listening. Oh, cool. Oh, that's very cool. That's very cool. I remember reading it. Absolutely. So we take a look at Pepsi. PEP is the ticker symbol out here, and you're looking for a bottom. Right now, what I'm going to give you as a bottom level, no bottom pattern here as we speak, but an area to look at is going to be 180.69. Why? We're trading below the green oscillator and change line on the daily time frame. We're trading below profile levels. We have an A to B equals CD pattern. We're going to take a look at that here momentarily, see where that projection might take us to. But right now, it's the 180.69 area I'd be looking at. Pepsi did, when I look at the weekly chart now, Pepsi did close above the top of its bearish structured weekly profile for 2 consecutive sessions. And last week, price pulled back and it stopped right there. Where's there? 184.58. And this week it's tested and it's rejected it. So that's a bullish sign right now for Pepsi. But on the daily time frame, we don't have a bullish sign. So we're cautious on the weekly. Cautious on the monthly. The monthly has a wave number 7 top with price trading below its green oscillator and change line, telling us it has lost its momentum, but above profiles. We're going to go with more of a neutral signal on the monthly. The daily is the weekly is a consolidation, and for the daily for Pepsi, let's go back to Stevie's black background charts and let's go take a quick peek out here. Let me change here and let's go see about that A to B equals CD pattern to the downside. So if you give me a moment out here, the A to B. Now I'm looking at one within potentially a large one, but we're not going to go there. So the A to B equals CD would look like this. The A point is going to be the high on the daily time frame. The high I'm using here is July 26th. The B point looks like that low came in on the day of August the 1st. A retracement up into August the 2nd. The following day it was a 59% retracement. So prices hit the 1-to-1 level. They'll also have a new profile, but no bullish reversal candle just yet. So be patient. Your resistance zone on a rally out here for Pepsi is going to be between 187 and 188 out there. Again, let's look at a 30-minute chart and just see if there's anything out here to assist us. And you've got a Rhodes momentum indicator bottom. And this does say, this is suggesting that Pepsi does want to rally further. And so that rally further, it's that 187.03 area that could be the move. I would still be patient here. Just be patient. But I'm just sharing with you that this one is not that easy because you've got that weekly that has held that strong level where that counter trend move should find support. And it's really all about the body of the candle, not the wicks, the upper or the lower shadow or the upper or lower wicks. Those are the screaming memes out there. So that's the best that I can do for you, Rich. I do hope that helps you out. John C. in the Tigers Den wants to take a look at Micron. MU is the ticker symbol. We're going to switch over to those white background charts. See, I caught it this time. That's a good thing. And what we'll see is today is going to become bar number 7 of a TD9 count. So perhaps what we'll see with Micron is a TD9 count bottom that forms between tomorrow, Friday, and then next Tuesday. The weekly chart, you're consolidated with inside its profile, but trading below that green oscillator and change line. 64.73 is the next level of support. You're consolidating with inside the monthly chart with price sitting at not profile, but oscillator and change line support. It still looks like to me what Micron wants to do is move lower. Again, maybe we get that TD9 count bottom, John, and the earliest that we would see that signal would be Monday. So when I'm back on Monday, let's remind me, and we'll go take a look at Micron for you. Steve Rhodes with TFNN. We're going to take a look at SABR for Fletch, and it looks like the U.S. dollar, Japanese yen for Peter inside the Tigers Den. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tigers Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tigers Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
folks, let's go take a look at Sabre. SABR is a ticker symbol. Having a nice day here. We do not see any kind of a top. It is in wave number 7, but it needs a lower high in order to confirm that top. You are above all kinds of breakout levels. You're above all kinds of resistance levels. That's on the daily, that's on the weekly, and now that's even on the monthly. The monthly has a new profile formed last month. The top of that profile was at $4.96. You're at $5.67. This thing wants to cruise higher. Where's the next resistance level? I'd have to say it's going to be at this point right here, the high of February 23rd, the high of February 2023, and that's at 792. If you get above 792, you're likely going to make a move up. Well, I don't know where you're going to make a move up. That's the next level of resistance, though, when we take a look at SABR. So, Fletch, best of luck to you there. We had a request to take a look at the U.S. dollar, Japanese yen. If we take a look at it, well, that's not it. Let's try to get those charts up on our screen here, Stevie. Here's the U.S. dollar, Japanese yen. Looks to me like what this wants to do is go tackle it. It's formed a nice TD9 count bottom pattern. It did that on July 14th and the 15th. That is now taken price, or should take price up to its TD9 count breakdown level. And that's up at the 144.73 level. If we look at the weekly chart here, it does have some resistance. That resistance up at 143.48, so basically right around the same area. And if it clears that level, then we should be looking at a move up to 147.56. If price can close above that level, you're back to its highs from back in October of 2022 out here. So what we have out here is we have the U.S. dollar, Japanese yen weakening. That's putting some strength inside the U.S. dollar index. And finally, to close out the show, Hector wrote in, and Hector wanted to take a look at the A to B equals CD pattern for ExxonMobil. So let's go switch over to those black background charts. And Hector, the A to B equals CD that I've got, you want to watch today, because you've got at least one confirmed A to B equals CD to the upside. You're at the 1 to 1.272. If this were today's close, we would say that ExxonMobil just gave you a sell signal, because that would be a bearish shooting star. That's my A to B equals CD. You'd like to use a different A to B equals CD pattern, which is also fine out here. I'm going to go ahead and put that one in. It looks like that had the required retracement, but don't forget the other A to B equals CD pattern out there. And that's the one, that's the smaller one. If you get a bearish reversal candle today, ExxonMobil is likely to retrace. Folks, have a great weekend. I'll see you on Monday, and be safe out there and have a terrific Thursday. Fantastic Friday. Take care.